Good morning, everyone. Welcome to Pre-Bell with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst. I am part of MarketSmith India team, which manages model portfolio and the commentaries you receive every day. Before we go ahead into this podcast, I like to state the disclaimer very clearly, which is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. It's very important to understand the Nifty's price volume action to gauge the market. Nifty is a key benchmark index, so it is very important to understand the Nifty's movement to view how the Indian market is playing overall. Some of the other key indices to track are Nifty mid cap and small cap indices also. So on weekly basis or on once in a day, if you go through these indices and if you look at price volume action closely, you will get an overview of how the market is placed, whether the market is bullish, bearish, or sideways. So you will get an overview. So first, look into Nifty's chart and to understand how it is currently placed. As we have already seen the huge rally Nifty has given from starting from April and from 16,800 level, it almost touched 20,000 level, which is a very strong rally which Nifty has seen. During this upward rally, you can see Nifty has tested its 21 DMA more than a couple of times, and it has also found support at this level, which is a very positive sign. And whenever the index is rallying higher, or whenever any stock is rallying higher, if it finds support at its moving average, then it is more constructive rally rather than a stock or index breaching its moving average. So if you find these signs in any other stock as well, so please be considered that it is a constructive movement on the upside. And after making a new high around 20,000 level, and also we have changed the market status to confirm the trend here, and we have added stocks to portfolio, and our portfolio has been doing clearly outperforming the market. Nifty mid cap, small cap, all these benchmark indices we are clearly outperforming on 1 month, 3 months, 6 months, 1 year, and most of the time frame. So this is a key. Whenever the market is in uptrend or in rally, our strategy will give you more returns. Let's say Nifty moving 10%. So we can say that our because cancellation is based on a growth-based momentum strategy, our portfolio will definitely yield more than 10%. So that is a key in our portfolio. But when the market is moving sideways, that is where we try to trim down our model portfolio stocks, and we try to exit some of the stocks. We are happy even though we do not hold any stocks when the market is in downtrend. But whenever the market is in rally, that is where we make huge returns. And once in a year, if you find this kind of rally for a period of 1 or 2 months, then definitely we are going to outperform the market. Coming back to this Nifty's movement, I can see after making a 20,000 level, Nifty has come under some kind of profit booking and selling pressure as well. You can see 21 DMA, which acted as a good support in the rally. It has been tested, but it closed decisively below it. It breached its 21 DMA as well. And recently, it has also breached its 50 DMA as well. That is in the previous week, that is on Friday. Yesterday, Monday, Nifty played in the positive territory, and it almost touched 50 DMA as well. But still, 50 DMA has not been reclaimed by the index. On the distribution day count wise, we are at 6 because one distribution day has expired yesterday. And Nifty trading below its 50 DMA, it's very closer to 50 DMA. That is why we have not seen the market status to downtrend yet. But if the Nifty doesn't reclaim 50 DMA in the coming trading sessions, and if there is 1 or 2 distribution days addition, then definitely we'll change the market status to downtrend, and then we'll hook out profits in our model portfolio and try to exit most of the stocks from portfolio. Coming to the stocks which are news and which will be under radar during the trading session, NBCC India, which is the government-owned construction company in India, has received an order worth 66.3 crores from Indian Medical Association, and this order includes planning, designing, and execution of uh, Indian Medical Association house at Indraprastha, which is in Delhi, and the period of execution is 30 months from the date of receiving order. SJVN, the subsidiary company SJVN Green Energy, received a letter of award from Assam Power Development Corporation for 3 solar projects. And these 3 solar power projects have a cumulative capacity of 320 million watts. HFCL's fundraising company has approved or decided to raise funds by issuing a QIP, that is qualified institutional placement, and the floor price for this issue has been fixed at 68.6 rupees per share. Sun Pharma has come up with their guidance for the financial year FY24, and the company is expecting a high single-digit consolidated top line growth. High single-digit can be considered around 7 to 9% of growth on the top line, and on the R&D front, the company is expected to spend around 7 to 8% of its sales in FY24, and within the R&D, the company is increasing spending in the specialty business. Coming to institutional activity, FIIs, foreign institutional investors who are net sellers in yesterday's trading session, they have sold more than 1,300 crores of Indian equities. On the domestic institutions front, they gave support for the Indian market. They have bought more than 200 crores of Indian equities. Overall, on net basis, FII selling has been given balance by the DIIs buying. If you're looking for global cues, most of the global cues from the US market are positive. 3 major indices which we track in the US market, Dow Jones, S&P, Nasdaq Composite, have closed in the positive territory with a gains of 0.6 to 0.8% overnight. Asian markets, as we speak, are trading in the positive territory as well. Nikkei is trading with the smallest gain of 0.2%, whereas Kospi and Shanghai are trading with higher gains. SGX Nifty is indicating a positive opening for the index as well, around 19,340 level. And if the Nifty reclaims 50 DMA in the today's trading session, then it is going to be a positive session for the index. And distribution days are going to expire in the upcoming sessions as well. So the weakness will come down. The index reclaims its 50 DMA. But on the downside, if the 50 DMA is breached, then definitely we are going to see more and more selling pressure in the market. The chart has already picked MA Organics. The stock is looking very good. Currently, it has formed a stage 1 cup-based pattern. It has broken out recently, but after breaking out, it has given a bearish reversal on the next day of breakout itself. In the next 2 trading sessions, it has edged higher, but there is no momentum in the stock. But if the stock comes to pivot, that is another 2% from here, and if it finds momentum, then and if the market also stays positive, then we might consider for addition. We are like this stock because the ratings wise it is looking very good. You can see EPS of 91 indicates a strong fundamental character. This is reflected because of consistent growth in its sales and EPS. RS rating is slightly beaten down at 68, but if you observe the RS line, you can see it has been trending higher, and it has also made a couple of blue dots recently. That indicates a fresh rally about to happen. On the blue dot front, A by D rating, another technical rating, is looking very good. And another key parameter in our cancelum, that is institutional holding. The company, even though the magnitude of funds are on the lower side, but there has been consistent growth in the number of funds section. The new funds have been attracted to the company, and they have been investing consistently, which is a very positive sign. So if you are looking for any fresh addition to your portfolio, you can consider ME Organics on the breakout. And if you already have this stock in portfolio, you can keep 21 DMA, which is a green line, or 50 DMA, which is a red line, as the stop loss levels. Thanks for joining today's pre-bill. Have a good trading session.